Welcome to the demo of the indicative cash flow breakdown, a new table attached to all of your property cards inside More. So as you navigate to your property investment card, you'll be able to see a new tab called cash flow, which will then show you a table of your indicative cash flow. So ever want to know how much a property is costing you, how much is it bringing in profit, how much tax are you paying on each property, how much tax are you saving based off each property. So this is a table to start answering some of those questions for you. So let me break down this table and show you how you can get the best out of this insight. So as you navigate to this tab, you will see your outgoings, your income. This is based off all the information that you've entered into More. So you'll see your income over here, your outgoings, including your loan repayments, which gives you a total, in this case, loss before tax. How much is this couple's costing this property per year? We then have a tax saved estimate and then a final cash flow shortfall after tax. So how do we get this information inside this table? So going to your details tab, any income that you attach to the property will display. Any outgoings you also attach to the property will also show in this table. This is what will make up your income and your expenses. Now, navigating to your loans, if you click away from your property card, you can go to the borrowings. This loan here was created for the purpose of purchasing this property. So making sure the purpose of the loan has been correctly attached to the property. You have a correct outstanding balance. You also have correct interest rate and correct current repayment value. Now, all of these inputs will affect your calculation. So one high thing to recommend is offsets. Always make sure your offsets are attached to your loans correctly, because you can see an offset benefit by having the money sitting in that offset. So navigating back to the property card into the cash flow table, you will see that all the information that has been attached is showing here. I want to focus your attention onto the loan. Attached to each loan, you will see a info icon. This will then allow you, clicking on this will show you a info dialog, which shows you your repayment value that you have entered in, the calculated annual interest based off the interest rate you've entered in, and the outstanding balance. We then have a look at if you have any offsets attached and what is the expected offset benefit annualized. We then calculate your annual interest payable less your offset benefit. So keep in mind, interest payable for a loan is a deductible cost. However, principal repayments are not. So this is why we distinguish the difference between these two figures. You have the ability, if you know money is coming out of your offset, you have the ability to remove offset in benefit in your calculations. You would notice that has changed some of the figures at the back. In this case, I will put this back in. Now, coming over into your tax saved section. So your taxable assessment for this specific property is looking at this property in isolation. So we're not looking at your portfolio as a whole, which can affect the calculations when you're looking aggregately, because tax is calculated aggregately. If you want to be more specific about your aggregate totals, navigate to the home dashboard. Whereas this indicative cash flow breakdown is trying to focus purely on this specific property. So in here, we are looking at the annual income of the individual users, because your tax is calculated individually based off your individual tax brackets. We do take into account annual depreciation if you have that in and you've entered it in against the property. We then look at your total claimable property loss, which looking at that, your income minus your expenses, minus your depreciation, also minus your interest payable on a loan. So we've got the total claimable property loss. We then show the tax brackets for the individual users, which calculate your tax saved values. So these two tax saved values will equal your total tax saved. Again, if this property is positively geared, this will be pivoted around where it is your tax payable, not your tax saved. In this case here, it is a negative geared property. So you'll be able to see the loss before tax, the estimated tax saved, and the final cash flow shortfall after tax. So have a look inside more today to see how it looks for your properties as you log in next.